Hello, traders. It is Tuesday, the 19th of February, 2019. It's 8:02 a.m. Chicago time. Very cold here. Um, Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Is it an irony that I have a sunburn while I'm sitting in 22 degrees Fahrenheit here in Chicago? Probably is somewhere. This morning, the market is pretty flat, seeing a slight allocation away from risk. Um, Remember that yesterday was a holiday, um, so I'm going back to Friday as a point of reference for the last uh, regular session, since the equities are still we're still trading. Yesterday they were not. So Friday ended up with a very strong close, a burst up into 27.7750 or so, and today we're trading at 27.6750, about 10 points below. It's yesterday. I don't recall what the chart looked like, but before I removed the data, but overall, not much to talk about in terms of what happened yesterday. This is all driven, of course, by the China news. The Prime Minister of China said that there was a lot of progress being made. This came out at during the European session on Friday morning here, Chicago time, and the market popped higher and has been strong. We're back into the balance of Friday in the ES, so we're looking at uh, the volatility index popping higher by 1.68%, up 27 cents, trading at 1660. And then we see money flowing into safety assets. The cable, the bonds are up 12 ticks. So the Bund is up 26 ticks. The 10 years are up 6 ticks, 6 full ticks. I consider those half ticks when it's in between ticks. Um, and then the laggard today is the Euro Stocks 50, down 17 points, which isn't too much, about a 0.5%. The Russell down 6.1 points, 0.38%. So again, coming into the market today, risk off sentiment is dominant overall. Looking at what's on deck, there's a new round of U.S.-China trade talks to begin in Washington today. The new round between the U.S. and China is to resolve their trade war. Will take place in Washington. With follow-up sessions at a higher level later in the week, the White House said. Other than that, after the Wall Street rally on Friday, um, in case you didn't know, the Dow and Nasdaq posted their eighth consecutive weekly gains. The market's been on a tear since the year started. Um, but overall, there's not much to talk about here in terms of what's taken place over the last session or so. As far as the the calendar, there really isn't all that much today. We do have NAHB Housing Market Index expecting 59, the prior's 58. Not much there in terms of movement. Fed's Mester has been speaking for the last 15 minutes or so. And then that's it. There's not much else on the calendar. Very light day today. Tomorrow, Wednesday, we get European consumer confidence and the FOMC minutes. And then that's all she wrote. Really, there's not much to this week in terms of releases. So not expecting too much movement in the market. So in any case, let's move on. I don't have a review, but what I would like to do is go over what the market has done so far since I wasn't here on Friday. I was a long weekend. I was gone. I'm going to just take a look at what has happened overall to set the context for what we're heading towards. So we have a gap up. We put in an additional gap on Friday. The gap mid is around 27.60 and a half. Um, the gap is about 11 ticks deep or 10 ticks deep or so. We do have an open gap down here that we have not tackled or closed yet. We are above the MC point of control for the year. Let me pull in the profile. Here's where we are. We've gone through the 2731.50, which has been popping back and forth depending on the day between 2731.50 and 35.50. And and then overall push through this really big low volume node, this MCLVN at 55-ish or so, which is about in line with the 200s simple moving average on the futures, and the market has popped right through and is pushing higher. Now I'm seeing, on FinTwit and elsewhere, I'm seeing murmurs of, don't get too excited about the rally. This isn't likely to be sustained, and I want to just remind you that, that's what was said on the pullback to the 50%. That was what was said on the pullback to the 50 SMA, which is about 150 points lower. Now, that's what was said about, pulling back to 2607 below, to pulling back to the MC point of control. Um, and so it's hard to say what the market is likely to do, but it's clearly dominated by bulls and buyers. And so, it's this is what we have to contend with at the moment. Um, this is pretty clear now to 2,800 in terms of key areas to test, to be honest. So, barring bad news, a deal that falls through with China or something, this is, trekking along pretty good and is squeezing a lot of, VIX longs and a lot of shorts here in the ES. So overall, I'm not seeing why I would expect that the market is likely to suddenly turn here. The idea is not to predict whether it's going to turn or not, but to be ready when it does, if it does. And that's a big if. So this is the overnight session of starting with yesterday at the 5 o'clock reopen. So we're ignoring everything from Sunday night through Monday noon Central, 1 Eastern. And so what we've done is we've opened right at the high of that strong close and have just um, consolidated throughout the Asian session. The Europeans came in and sold it off through the mid, extending this range. This range was really awful. It was 7 points or so to start with, and we've put in a triple distribution overnight profile. The market is in price discovery mode and is working its way through Friday's action, Friday's range. So we have pulled back to what was really a very, very balanced session on Friday until the close. We have pulled back into the value area low almost at 65 and a quarter. The low overnight is 66 and a quarter, and it doesn't look very strong. The market has moved back into balance, and we have this gap zone beneath us. So that's how things are shaping up currently. Taking a look at what we were expecting today. For today, let's move to the current session. The way this is setting up this morning, the key expectation for today's session is that we are likely to make an attempt higher back into the point of control from Friday, around 2770. The expectation is for an open auction in range that drifts up into Friday's point of control value high. I'm looking for a test of about 2771, and I'm looking for it to push back through, consolidate in the middle at the open, and then start to work itself back into the gap zone. Remember 60, 50, maybe a pause area right here. But overall, I'm expecting it to shift back into Thursday's range and hold steady in here. I'm expecting the gap to close today. If the pop higher on Friday, uh, based on how it was trading and the area that we're in, I'm expecting that to be a bit of a blow off rather than a true rally. So that's what I'm looking at for scenario one. Scenario two Scenario two is one where we have an open auction, we drift down into the gap zone, get back into 2660 or so, come back into the range, hold steady in the range, and just test out into that the singles area. The singles start at 2773 and a quarter, and then hold in range after testing lower. This is a more bullish scenario, and actually this is more favorable with the trend, I'm looking for this to revert back. The way the action has been in the overnight session is, it looks to me like buyers were not able to sustain higher prices, and sellers are testing for more buyers. And I expect that test, given the weakness of the overnight session, I expect that test to continue lower. It may not make it into Thursday's range. Thursday, for me, an important area for Thursday is 27.55 right here. This is the MCLVN, and the top of this box, this zipper right here on this 15-minute chart. This is an important area for a first test, but overall, that's what I'm looking at in terms of what I'm expecting today. Okay? So I'll leave you with that. Good luck today, and we're back in business. I'll catch you tomorrow morning. Pay attention to your risk and only trade when you see an edge. However you define that. Make sure you only trade when you see something worth trading. Otherwise, you're just a money donor to the market. Good luck.